Welcome to Java. Thank you kindly for joining me. It's December 5th, 2024. It's also Thursday. So I hope your week is going well. I'd like to thank all of those who made it into the Discord last night. I think it was a good discussion and hope that you got something out of it. Now, tonight we will be discussing in more detail cryptocurrencies. Will be with PJ and Stav. So if you would like to join us, if you have any questions on cryptocurrencies, I encourage you. It is 5 p.m. Eastern Daylight Time after the market close, after Greg's Live. So with this, there is a lot to cover this morning. My apologies getting this out a slight bit late, but there is a lot going on that I want to go over prior to markets open. So let's start off with the markets and the risk right now. So always starting with the MMRI. If you're new here, this is an amalgamate basically of the 10-year yield and relative strength of the dollar. Now, risk between yesterday and today has gone down slightly. There was a bit of a pullback, kind of flat yesterday with some all-time highs. We've had some interesting things happen overnight. Now, the MMRI right now is at 276.9. So still high risk territory, but as I said, it's drawn back a bit. Now we've got the fear greed meter has dropped significantly. We're on the verge of neutral, so we're watching some dropouts and volume come back a bit as people are kind of getting a little bit chopped out of this market. It's not just rising as significantly as it has been of late. Now, the 10-year yield and relative strength of the dollar, this is the 10-year yield, 4.207 right now, and the relative strength of the dollar still above 106. And at this moment, these two both look to be rising. Now, as these rise, they put pressure on stocks. Now, to jump over to the stock market at this moment, showing a bit green, opening green, we've got gold pretty well flat. Oil slightly down, but that may change because there is the promise of a fixated supply coming from the Middle East. Now, if that holds, that could give oil a bit of a hold right here. It's been weak lately on demand, so demand issues. So both sides of that. So stocks up for now. The VIX is relatively flat, but we've got the futures are looking very weak. Now, this is pretty leveled flat, but at the same time, it is definitely not showing strength. And what is going on with this? So the sentiment right now is that greed is dropping. We've got risk slightly lower as stocks are deflating a slight bit. So we are in headline-driven stock market. What does it mean? Specific stocks, sectors are now kind of sorting themselves out where you can't just go into anything and have it go green. If there is headlines on a particular stock, will affect it significantly. Now, the market in general is waiting on the big news, and that's really jobs report Friday morning, tomorrow morning, early prior to the market open. We'll talk about that in a moment. Now, with this, I want to mention cryptocurrencies. You're likely to see this all over. Bitcoin went over 100,000, breaking that significant level. Right now, just below 103,000. We've got a target mark on this right around 106.5, I believe. So just above 106,000 level. Doesn't mean it'll reach that prior to a pullback, and doesn't mean it'll pull back, but those are the probabilities. So with this, it is pretty much rising tide, floating all ships, this all of the cryptocurrencies, although XRP is down over the week from its epic rise. So Bitcoin surging to a record. They're saying this is because Trump chose a SEC chair, very pro-crypto, so going to advance with the move to cryptocurrency, and digitizing in general is what this means. So with this cryptocurrency, really, and this could be sucking a bit of money from the stock market, so to speak, as well, because people want a return for their money. So we've got French bond risk premium dips and stocks rise after the government fails. They had a no confidence vote yesterday, and this is kind of driving their government towards a more conservative one. And so what is happening with this is the money is shifting as the confidence and the sentiment is shifting. This is exactly why I bring up the sentiment for the stock market, because it kind of gives a harbinger towards the direction. So with this on the United States calendar, we are expecting initial jobless claims prior to the market open and the trade deficit. Now, the trade deficit is important because this is one more mechanism that currency wars and the trade can kind of be manipulated a slight bit. Now, the United States has a larger trade deficit, and when the US suppresses other currencies and basically makes it cheaper for it to catch up on that deficit, is when they will buy it down. So we'll be watching for that. But as I said, large news, US employment report tomorrow morning prior to market open, as well as the wages reports. Then after that, we're going to get consumer credit at 3 o'clock. Now, I've got a couple of other stories about this credit. At the moment, we've got a lot of pressure on the United States consumer, getting reports from Capital One, which is one of the largest credit card companies that runs it, saying people have stopped paying their Capital One bills. Now, they are specific to kind of, if you will say, the lower and lower credit rating industry. So those that don't have the best of credit now, not surprisingly, beginning to default on those card loans. Now, I want to bring up a word about inflation because this is a major player and why they are no longer able to pay their bills. Now, this comes directly from the Federal Reserve Bank of St. Louis. So from the horse's mouth, if you will. And they had this article about how much can households gain and lose with unexpected inflation. And they have a graph, and what it is lining out is what we already know, but they are admitting out loud that at the rate of inflation, even at their calculated rate, which is skewed to the downside to make them look a little bit better, at around 4%, 4.5%, is that people are losing money at that rate. Well, that's admitted theft, that your money is declining by that amount because they are taking value from it through inflation. So if you've got a pile of cash sitting in your safe, that's how much you can expect to lose from this. And for some reason, people expect this as inflation because they don't see what it truly is. Now, all of the prices rising, people cannot afford things. It's not that the prices are rising, it is that inflation is inflated money supply, and that means that you have less buying power with what you have. So government theft on an epic scale, and that's exactly how much you can expect at least to lose. So going back to the government, why all of this is happening, we've got political issues across the border back to France. The French Prime Minister is going to resign as this political crisis is deepening for them. So after this no confidence vote, going to oust them. So this is affecting the markets a bit, mostly with the euro and their stock market. But with this, we've also got Bundesbank chief. Now this is Germany, is Bundesbank, calling for softer debt break to ramp up investment. Now, they want to continue their debt because this continues their inflation. And the reason that the French Prime Minister is resigning is because they were trying to rein in debt, cut the spending, and the people don't like that. So going under these harsher conditions, they are voting them out. So just to tell you what is going on in the background of all of this. Now, we've got this ripple out effect because we've got a very nationalistic administration coming in. They're calling this the Trump effect. The yuan now on the other side continuing to free fall as tariff threats grow. So this is another version of the currency war. As the dollar strengthens, relative dollar strengthens, it's still losing value through inflation. But what it's doing is pressuring other currencies to lose it faster. So now the yuan devaluing even faster. They're all incurring more debt and pushing towards this. And this exactly in France is a version of what can happen if you try to reverse this. So this little bit of a cloak and dagger story here, the CEO of United Healthcare yesterday was assassinated, if you will. And there are a couple of indicators. There were large volumes. As this happened and the news came out, the stock rose. So a little bit of a story here in who purchased right before this occurrence. Okay, so with this, I'd like to speak about cryptocurrencies a light bit. We've got Blackrock always getting their fingers in the pies before they let other people know. Now they've got a Bitcoin fund. They purchased as the dip happened. They're at 500,000 now, as the United States ETFs are pulling in 353 million in inflows. Now, as I spoke about yesterday, corporations can put out bonds or loans and purchase back for themselves, and this is how they grow. Well, BlackRock is putting out loans or ETFs, getting other people to put their money into this ETF. With the ETF, they are purchasing more of the asset. Now, they hold the asset and they're putting out promissory loans through this ETF. So using other capital to grow themselves so that they can, in essence, in the long run, manipulate this asset if they can reach a certain amount. But good luck with that. As long as people don't sell too much, don't go below a certain amount or value. It's designed so that that cannot happen. So we'll see. But they're also saying the world economy has exited the quote unquote boom and bust cycle. They believe we are in a perpetual growth at the moment, and they are citing that the fundamentals have shifted with the emergence of what they're calling mega forces, including artificial intelligence, new technologies, and they think that the economy of the world is being reshaped by net zero carbon emissions. Now, they brought out that lovely thing in order to control companies. They're talking about geopolitical fragmentation, which we're seeing right now, demographic trends and digitization of finance, which is cryptocurrencies, and artificial intelligence. So, with all of these, they're in the background of all of these things that they have mentioned, and they have a large amount of control if you're not familiar with them. So, putting that aside for now, there is privacy coin. It's called Monero. And with this, this one was completely designed for private transactions. We'll see how this is allowed to continue. But with all of this going on, this one is gaining popularity very rapidly. Now, aside from this, we've also got Solana in the news because there is another ETF that might come out on this one as well. Now, it is showing a shift out of the meme coins really and going back to utility coins. And what do I mean by this? All of these coins that it's shifting back to, whether it's Chainlink, whether it is Stellar, XLM, they actually have use cases that they were designed for, not just popularity. So with this last thing I would like to leave you with is Coinbase is the largest accepted exchange in the United States. Now, they're targeting Southeast Asia crypto expansion, supporting the development of the BOT, the peso, stablecoins. Now, these are local currencies to these areas. Now, they are admitting out loud what we've known, but what they've been keeping quiet about for a while. Literally the same money, but just faster. So it's only method in the way that they're trading this, but all of the money has been digital for some time. They're just changing a little bit in the background of this. So continuing towards this world of cryptocurrency, the tokenization, and basically this is one of the largest companies behind it, owning it, not by the governments literally, but by those behind it pushing the governments. So with this, I wish you all a great trading day, or just a wonderful day in general. Thank you so much for being here, and until I see you again, stay free.